Hey guys, I'm Tim Kotzman here with punter Jeff. Jeff, how are you?
Doing well, doing well. It's been a exciting year and got a cool horizon to look forward to. So yeah, excited as I've ever been.
Excited to have you here. Do you want to take us a little bit about, take us on a journey of your background and your journey to Bitcoin?
Yeah, absolutely. So a little bit of my background. I went to college up here in the Pacific Northwest, a small liberal arts school. Studied business and economics. Was when I studied business, I had a real focus on finance, and I graduated at the top of my class with a focus on finance. Took every single finance class that our entire school offered, and then got right into my corporate job right out of college, doing reinsurance broking. So reinsurance broking is selling insurance to insurance companies to mitigate and manage the volatility on their balance sheets. So really, I've been doing that for the last 11, 12 years. And so I've got this really unique view of seeing volatility, thinking about probabilistic outcomes, designing financial transactions that consider probabilistic outcomes, and selling those tranches of risk to different sources and pools of capital globally. So, that's the reason for wearing the suit. We've got this same energy going today. So suit and tie, totally tradfi. Don't mind the weights in the background. I do work remotely. So that is, that's a little bit of my background, about, my educational background, getting into my corporate background, and what I've been working on for the last, decade plus. That industry, the insurance and reinsurance industry, is developing incredibly rapidly, faster than most people realize or understand. And I'm excited about the future of where insurance and reinsurance can go, thinking about tokenization, digital assets, and those components of the financial world. So pretty exciting. Getting into my Bitcoin story. So I think many people have heard this, but I was I was trading equities during 2020, during COVID, when everybody was trading equities, and people were, you could have bought anything and you would have made money on it during 2020. And during that time, I was also dabbling with options and teaching myself options beyond the traditional Black-Scholes framework that I learned in college, because you could learn the math of options, but really learning the mentality of options takes some experience, and you kind of got to understand how they work. You got to understand the probabilities. You got to understand the different perspectives of puts and calls and different strategies, and thinking through the different components of options before I felt comfortable, diving head first into these. So I did really well on options. I purchased Sony call options before the PS5 came out. My thesis was, Wall Street doesn't understand how cool the PS5 is.
Hmm.
That was basically it. And so I was buying call options because I felt like I had asymmetric information on how cool of a computer the PlayStation 5 was. Did really well on those call options. About the time I exited that trade, I jumped into the GameStop trade, liquidated my entire portfolio, bought GameStop shares. The funny part about that story is the Friday beforehand, I saw the price of GameStop going up. It went from 10 to 20 to 30 to 50. And I bought put options on the Friday, which is a bearish position. I thought, GameStop's not worth this much. What on earth is the whole world thinking? So I bought put options, which was bearish. Over the weekend, I did a bunch of research about my position, and I realized I was totally screwed. I was totally hosed. And this thing is going to go way higher. So on Monday, I sold the put options, the bearish position, for a profit. Somebody stupider than me bought them from me.
Hmm.
And I liquidated my entire portfolio, and I bought equity. I bought shares. I didn't buy any options. I just bought equity to basically put more pressure onto the entire situation, in the squeeze. So in that scenario. I mean, from there, it went up to, 60, 70, 100, 200, 300. And as this was happening, I totally ruined a vacation with my wife. We were like out on this beach house and I couldn't think about anything else but this GameStop scenario, and having to game theory my way um, through the whole problem was really, it was a really interesting exercise in thinking about, there are more players in this game than just retail. There's, a lot of big money in New York and other hedge funds all over the globe that are in on this trade, and they don't need or have the same desire for the same returns that the retail market needs.
Mhm.
So I, game theory through that perspective. And when Robinhood shut off the buy button, that to me was a signal that sentiment would be broken and that traditional finance is probably going to exit the trade. So I exited the trade the following week. On Monday morning, I watched the stock start to fall, and I exited the trade, and that was kind of the end of my GameStop position. But then from there, I was sitting on a decent pile of capital and trying to figure out what to do with it. I traded a couple other things. There was a position I was in. I lost $75,000 in 5 minutes. I realized, whoa, like this is I don't know everything, um, and decided to get a little bit more strategic with that capital position and thinking about long-term thesis, and how to maximize return on a long-term thesis. Um, Entering into and I had been dabbling with Bitcoin, here and there. I traded it in 2017. Back in 2014, my senior econ thesis class, 3 of the 6 people in my class did their thesis on Bitcoin. So
Hmm.
I had heard about it, I had known about it, but I hadn't done my own, due diligence and like trying to figure out and expand my brain about the horizons of like a new currency, new digital currency entering the scene. So 2020, I started doing more research. I basically took the orange pill myself, put hundreds of hours of research into it. And I was also fascinated by MicroStrategy and the stock performance of MicroStrategy relative to Bitcoin, how it outperformed the price of Bitcoin by multiples in the 2020, 2021 bull run. So in thinking about that, and I wanted to park all of my capital into Bitcoin, but I also wanted to think like, is there a way I can maximize the return on this? And can I develop a strategy to maximize return and really put me in a better position to ultimately have more Bitcoin? And that's what brought me to the MicroStrategy trade and developing my long term thesis on trying to buy options in the middle of the bear market and exit the trade in the middle of the bull market. That was I had this thesis in 2021, and I set a reminder on my calendar for September 22nd, 2020, or it was like September of 2022. September of 2022. I set a reminder in my calendar because that's when the January 17, 2025 leap options would open for trading. And I wanted to take a long-term position in options with leverage, to capture some potential future bull run in Bitcoin and MicroStrategy. But come September, the sentiment around Bitcoin was very poor, right? Like BlockFi, Celsius, FTX concerns, interest rates were going up, and Bitcoin was kind of crashing. It was around like this $16,000 range. And so I told myself, okay, when the price of Bitcoin starts to ratchet up, I'll enter my position. So I set $1,000 Bitcoin reminders in my phone. So every time the price of Bitcoin went up $1,000, I would get a notification or alert. So it was kind of like bouncing around, bouncing around. Then it went from 16 to 17 to 18. And once it hit 19, I was like, okay, it's time to go. And I had already developed my thesis in terms of, my strategy, how I was going to buy these options and, um, you know, where I was going to go with it. Um, so come early 2023, I started entering the trade heavily, um, with options and shares, and I was just dollar cost averaging pretty much like all of 2023, um, trying to get as much capital as possible. I was literally pitching family members on this trade. I was trying to pitch my grandpa on the trade, and I was like, "Hey, can I borrow this money? I'm gonna cap out your return, but minimize your downside." I was like literally trying to structure deals, and ultimately, like everybody laughed at me, and it was like, "No, you're crazy." Um, so I was
Wow.
like, okay, I got to bootstrap this thing. I got to do it myself. And so I was bootstrapping it all of 23, like literally piling in as much capital as I could. I thought it was crazy at the time as well, but I mean, I've ridden through a lot of this volatility, right? Like I was buying when the price of MicroStrategy is at $150, so like split equivalent of $15 today. I've ridden and up through the ETF, even down after the ETF. I haven't sold a single share or option along the way. So it's been a bit crazy. It was very strategic, and I put tons of time and effort into thinking about this, like putting game theory into the equation. Everybody's seen my spreadsheet where I walk through all the different components of the thesis, right? Like there's a I don't know, like a gig of data in there where I was running the analysis on historical Bitcoin prices, Bitcoin supply, the creating a valuation framework, trying to understand how anybody would value the company, um, and thinking through, a lot of those components. Yeah.
Speaking of, I guess, valuing, do you want to jump into NAV, net asset value, as far as MicroStrategy goes?
Yeah, and this conversation of net asset value is really interesting. There are a lot of perspectives out there, and it's funny. I had anticipated this as well, is that people are going to freak out about net asset value and valuing a company at some multiple of their underlying Bitcoin holdings, and it's interesting to see the battling almost on both sides from Bitcoiners and MicroStrategy bulls, disagreeing on this aggressively, which I
Very
find
aggressively.
very aggressively. But it's
Very.
like we're both going in the same direction, right? Like, trading this thing is incredibly hard. It's like trying to jump on a bullet train, right? Like you're gonna get your face ripped off. The thing's going 200 miles an hour, and then it just immediately stops. It goes the other way. Like Michael Saylor has commoditized the stock because of the volatility, and he's incentivized to keep it even more volatile. So the concept of this, thinking what you're doing, or where this is going, or the strategy, is crazy to me, right? Like there's no theoretical cap on the multiple of net asset value. It's not like it's gonna run up to 3 and down to 1 and run up to 3 and down to 1. It will likely breathe, right? Like I think Ben Workman has said this, is like net asset value will likely have this kind of breath where it will go up and it'll go down, and it'll go up and it'll go down as the tools are utilized to harness the value of the premium, and to maximize the underlying Bitcoin holdings. And I got on a Preston Pish podcast to talk about valuations back in March, because the same thing happened back in March, the March of 24, right?
Mm-hmm.
Price of MicroStrategy went from like $500 to $2,000 in a month. Right? It was crazy. Everybody was freaking out. It was like February to March was like the totally insane ride, and people were freaking out. People were saying it's overvalued. The short report from Carousel came out. There was definitely infighting between Bitcoiners and MicroStrategy bulls, and it was almost it's crazy because it's crazier today than it was back in February. But I think the concept back in February was a little bit more worthy of, of like the fighting at that point. But the reason I think Preston and I had this conversation was because I argued this is calculus, not algebra. And there's this the concept of rate of change is important. in my mind, when thinking about the expansion of net asset value and thinking about the probability of new entrants coming into play. New entrants being new buyers of MicroStrategy, passive flows, passive index flows, along with retail piling in and other institutional investors who are recognizing the power of this MicroStrategy trade. There's this concept in natural resource economics that comes to my mind when thinking about um, the calculus associated with the growth rate. So there's this concept in forestry. So the growth rate of trees, where the growth rate of trees when they're very young is very slow. And then when they start to get, 10, 20, 30 years old, the growth rate increases really rapidly. And when the tree starts to get really old, the growth rate slows down. And so if you're managing a forest and you're trying to maximize the yield of your forest, you identify the derivative of the growth rate of the tree, and that tells you where the rate of change starts to slow down and go the opposite direction. And at that point, it's the maximum yield uh, on your harvest, basically for forestry management. And so when I think about net asset value and I think about like this MicroStrategy equity, there's this concept of like I think there's going to be a little bit of a S curve type adoption with MicroStrategy as well, where we're still in the really early days of who knows about MicroStrategy, right? Like I run around New York and London. I talk to these people about what MicroStrategy is doing, and literally people laugh at me. They have no idea. It seems super scammy to everybody, and they don't understand. One, they don't understand Bitcoin. They haven't put the time in to understand Bitcoin, and two, it's hard for them to conceptualize like the framework of a company purchasing Bitcoin or transitioning 100% of their cash assets from USD to Bitcoin, and not understanding the downstream implications of that. So I think there's going to be this incredibly fast adoption of people buying MicroStrategy shares in the future, and I mean, partly is I think that because of the current design of the equity market, right, with how passive index funds work. As the price of Bitcoin rises, the market cap of MicroStrategy rises, and the proportion of dollars that's going into MicroStrategy is not increasing linearly; it's increasing exponentially. And so, in my mind, it actually fits the growth rate like equation for like trees or like harvesting trees like very, very well. It's kind of this S curve where you can um, maximize yield on the net asset value expansion from changing volume of people purchasing shares. So, you know, the other thing I think about with net asset value and managing net asset value, I'm sure this is a metric that the MicroStrategy team is probably watching, and they're probably thinking about it when they're designing their at the market offerings and selling shares in the market and looking at convertible debt. Um, and I think this equation is incredibly complex, and I think it's I think most of retail and most of Twitter are underestimating the complexity of the equation. Um, MicroStrategy can't. This isn't unlimited, right? I think a lot of the retail investors and people on Twitter think that at the market offering is practically unlimited, but the equation is a little bit more complicated because you've got to take into consideration ownership rights and ownership stake and voting power. And I think that's something that's probably closely monitored and closely watched in terms of Saylor's position and his voting power within MicroStrategy. Additionally, there's a long term strategy and perspective as well, where in my opinion, and people ask about this a lot. Well, like MicroStrategy is going to go down a ton in the bear market. That's the comments that a lot of people say. And in my opinion, I think MicroStrategy themselves could prevent the future bear market if they manage the net asset value of the stock appropriately. And I think this is a really big idea because, um, you know, if people anticipate a technical bear market is coming at some point in the future, then in my mind, there's incentive to let the net asset value run up a little bit higher.
Hmm.
So you have some cushion to kind of use and leverage with your stock price at some point in the future. So, like for example, let's just say that I don't know, 2026, like sentiment starts to change, and you know, there's kind of fear of a bear market for 26 and 27 or something like that. Um, there could be incentive to have the net asset value be much higher, so you have this cushion that you can kind of fall back on and push down on to capture opportunity in a stressed environment or a stressed Bitcoin environment. So um, if they manage the strategy appropriately, um, what we know of a bear market may not exist in the future because of their ability to capture the premium in a bear market. If there is a sustained premium, in my opinion, I think there will be if they get added to these additional index funds like QQQ and S&P 500. Um, so it's an interesting thought experiment.
I mean, you're blowing my mind. um, I have had some conversations around, and I don't know if you would agree or disagree with kind of looking at the chart of what gold did when the gold ETF first launched, and then it pretty much just went up with volatility for
Yeah,
the next, what, 8 to 10 years.
yeah,
um, and some people argue that MicroStrategy helped during the last cycle as well. So um, that makes
yeah. I
sense.
mean, they were buying in the bear market, and you can go see it. Like if you go on the sailortracker.com, they were definitely buying in the bear market. Now, the difference this time would be if there is a bear market, MicroStrategy's in strength. That's a big difference, right? Like people were concerned about solvency with MicroStrategy and like margin calls because their position was underwater. Now, if we think about a theoretical bear market at some point in the future, let's just say it goes to 500,000 and comes back to 250,000. MicroStrategy is not going to be in a negative position or concerned about a margin call. They're going to be in strength, and that is that's a little scary to me. I mean, like it's scary if I were any other company that were thinking about a Bitcoin strategy, I would be a little nervous because a little nervous about MicroStrategy's ability to continue to raise in this type of situation in the future. Basically, I think their lead is going to get even bigger and bigger and bigger uh, because they will be in strength in any potential future bear market.
Wouldn't that help any additional companies that put Bitcoin on the balance sheet if MicroStrategy was kind of blazing the trail and maybe not preventing a bear market, but preventing a bear
Yes,
market?
yes, 100%. But if you're on the sidelines now, right? Like if you're a
Mm-hmm.
corporation on the sidelines now and you're like, oh, I'm going to wait for the next bear market. Well, it's like, well, you've got a company that's going to be in strength in a bear market anyway. So there's incentive. Like you think about the game theory, it's crazy. There's incentive to start now, dollar cost average now, um, and start buying in perpetuity. So it seems pretty clear that there's no company out there that's necessarily interested in competing with them in terms of like getting to the 250,000 Bitcoin hodl that MicroStrategy has. Maybe that changes, but um, yeah, it'll be interesting to see how the game theory plays out, who adopts it, who doesn't, and how that proceeds.
What's your gut feeling on how many Bitcoin MicroStrategy could own 4 to 8 years from now? Is it 500,000 coins, 1 million coins, or does the math kind of not work?
Well, I mean, this is we're in this gold rush scenario, right? And if you would have asked me 6 months ago or 8 months ago, I'd probably say 300,000. Now, with my understanding of the strategy, the depth and liquidity of the convertible bond market, the ability to access these alternative pools of capital and monetize the volatility of the stock, I think differently. I think probably, um, yeah, I think somewhere north of 500,000, I think is like um, terminal MicroStrategy holdings. I think there is a point where they get to 500,000 at some point within the next decade.
Earlier, when you were saying it made more sense for the Bitcoin maxis and the MSTR bulls to be at odds back in February of this year, it made more sense then than now. Is it because there should be more clarity around certain things, or what does that mean?
Yeah, in my opinion, it's there's a lot more clarity. I mean, Saylor's been on what 30 podcasts since February, right? Like, I don't know the exact number, but he's been on a lot, and he's explicitly laid out the different pools of capital that he's able to tap. We've seen multiple convertible bond issuances. I think in February, MicroStrategy held 193,000 Bitcoin. And since then, they've added 62,000 Bitcoin to their balance sheet, which is like insane. They've done that via convertible bonds and this at the market issuance. All the while, Saylor also sold 400,000 shares as the result of an expiring 2014 option that he was granted in 2014. And we've seen the stock price go up. So the depth of liquidity is incredibly impressive. And if you just look at isolating the $2 billion at the market offering. So on August 1st, when they announced when they filed for the $2 billion at the market offering, the price of MicroStrategy was like $150. Price of MicroStrategy ended up going down to, I don't know, 120, maybe 115. And since then has gone back up to 225, now back to, whatever it is, 195. All the while they sold $2 billion of shares. That's a lot of money.
Yeah.
That's a ton of capital. Like that is an incredibly impressive statistic. And it's funny because all the while they sold $2 billion of stock and the net asset value expanded. Like people think they're tapping the NAV down. Well, they've been technically tapping the NAV up. Like people are understanding the potential future of MicroStrategy, and I think this is gonna move just a lot faster than people realize.
What do you think the theoretical possibilities are for MicroStrategy to generate revenue from its Bitcoin treasury as a bank in the future? We've seen Michael Saylor come out and say MicroStrategy is going to be a $1 trillion company. It's going to be a Bitcoin bank. That's the goal. Bitcoin development company.
Yeah, it's a good question. And I feel very strongly about this because I work in traditional finance and I see collateral used all the time. And I think the most important component here is that Bitcoin itself is the best collateral the world has ever seen. And I think that's a really big idea that people can sit on for a while. And maybe I'll tell a personal story, and I've tweeted about this, but last year back in 2023, I was looking at changing jobs, and I got hired by this company called Vestu. Vestu was looking to increase the insurance industry's connection to insurance-linked securities and bring different capital from different pools into the insurance market that can trade easier and much quicker. The company had been around for like 6 or 8 years. And when I went to join, I got a note from the guy that hired me. And it's an article. It's Vestu is under investigation by the FBI for a $4 billion fraud with a Chinese bank. And so basically there were all of these transactions that had been initiated in the insurance and reinsurance market, and the collateral itself didn't exist. Collateral was bad. So basically you had these insurance and reinsurance transactions that had capital sitting behind them to reduce the volatility of the balance sheet. and that capital didn't actually exist. These were letters of credit these were fraudulent letters of credit with a Chinese bank, where basically somebody forged some letters of credit and said like, yes, this collateral exists, you should trust us. That was basically it. And some of the reinsurance transactions are that simple. Like it's very on very large transactions, there's a lot of trust involved in a lot of these transactions, and that totally hurt the insurance industry and their mindset. This was a huge deal. It's $4 billion deal. There's, I don't know, $700 billion of capital in the reinsurance market. So it's like, it's a really big deal. Like 0.75% of the total capacity in the market was fraudulent. That's a really big concern. And so when I think about like the technological development and advancement of the future, collateral needs to get better. Collateral needs to improve, and having a digital ledger that's trackable, traceable with Bitcoin, you can think about a very transparent collateral process, right? Like Bitcoin itself is programmable. You can code Bitcoin so multiple people can hold it at the same time and basically have if-then statements built into the code. You could have time locks. You can have all these components built into like a transaction that are that's just kind of programmed into the Bitcoin ledger. And I think that technology and that ability to do that is going to expand and develop rapidly in the next decade. It's not necessarily here yet, but I'm based on the conversations that I've had at going to some of these Bitcoin conferences, this stuff is moving really quickly. And I think when thinking about MicroStrategy's ability to monetize their Bitcoin holdings, the concept of collateral is going to come into play, and the collateral is going to be used with, in my mind, I think it's going to happen in bigger capital markets before it happens on like a smaller retail level. For example, lending Bitcoin to banks or insurance companies to increase their capacity to write underlying loans, like retail loans or commercial loans or things like that. And how that works is basically every bank and every insurance company, they have regulatory constraints on how much lending activity they can do. So they hold all of these dollars, and they can offer loans based off of how many dollars that they hold. And there's kind of a theoretical capacity because, they don't want any bank or insurance company to get too over leveraged and not have the ability to pay out claims in the future or weather any storms from, volatile macro environments. So where I think this could be incredibly valuable is a bank can custody Bitcoin on behalf of MicroStrategy, a bank or an insurance company. And that could increase the lending capacity of that bank or insurance company for the ability to, generate future business at some point in the future. And this is kind of that like hybrid Bitcoin dollar economy where, if this is like diversifying your assets to have the ability to write more business in the future. Like if the value of the dollar falls, that's okay, because the Bitcoin that you're also custodying and holding on your balance sheet may be rising in conjunction with that. It's like a hedge on your portfolio to allow for future return on the custodied holdings. And the last piece I'll point on there is, every single bank and every single insurance company and most investment companies and pension funds in the entire world subscribe to the concept of Markowitz modern portfolio theory. Markowitz modern portfolio theory is a Nobel Prize winning economic concept of diversification. Basically, it's the math behind diversification. There's this, it's called the efficient frontier. It's like an ellipse. And the concept is if you add a new asset to a portfolio of diversified assets if that new asset has different risk and return metrics than the rest of your portfolio. If you add that asset to your portfolio, it will increase the return and reduce the risk of the entire portfolio, moving you out further on the efficient frontier of diversified assets. And that, I mean, it's a Nobel Prize winning theory. And now you have a new asset coming to the world with Bitcoin that is a different risk return metric than equities, than real estate, than currency, than global bonds, et cetera. And the incentive to add that to your portfolio, to diversify your portfolio, is incredibly high. It's like infinite, basically. So, you know, I a lot of people give Cathie Wood a lot of shit, but there's she puts out or her team puts out a like 100-page report every year called Big Ideas.
Mm-hmm.
And I think either in the 2023 Big Ideas report or the 2024 Big Ideas report, they run the efficient frontier of diversified assets, and they show you the most appropriate allocation of Bitcoin based on like an efficient frontier of diversified equities, basically. It might have been 22. Actually, I think it was 22 because in 2022, they came out with this efficient frontier of diversified assets. And like the number was 8%, like 8% of your portfolio should be Bitcoin. And then like right after that, Tesla bought 8% of their portfolio in Bitcoin. It was crazy. Maybe it was 10%, but it was oddly close to that report.
And that's much different from I'm going to get this percentage wrong, but like 84.6% that the secret BlackRock report a year ago said that was the optimal allocation, which
yeah. I mean, it depends on what your underlying assets are and what your goals are, right? Like, so everybody's portfolio is different. So everybody's may have a different allocation. Like, it just kind of depends on what your portfolio is, and you need to do some actuarial science and some math. But it's different for everybody. But I'll end it there.
How do you think of the concept of when you have a currency that's fixed, then the price is going to be volatile, as opposed to the price being steady-ish, even though it's not, with the US dollar, and the supply being volatile? And how does that inform how you think about what the volatility of Bitcoin is going to be as the price goes up?
Yeah, it's it's crazy. I feel like I can see this image in my head of, I mean, I've done the math. I've gone on Excel and I've mapped out the supply curve of Bitcoin, and we're still in this kind of like we're at this point where I don't know how much has been mined. 96%, 97% of Bitcoin has been mined, but over the next 100 years, the remaining 3% is going to get mined. So, my brain starts to think about calculus again, and we're now decreasing at a decreasing rate. So the rate of change is rapidly slowing down. And so I think that's why Saylor, points out, like, this is the gold rush. The next 10 years is the gold rush, because this is after 2032, the remaining 1% of Bitcoin is going to be mined over the next 100 years. And so your ability to capture that Bitcoin is going to be much harder and after 2032. So yeah, it's going to be really volatile while over the next probably 8 to 10 years. But especially on a numerical basis. But as the currency itself expands, as more energy is stuck into Bitcoin, the volatility may be, if the value of a Bitcoin is $1 million, we may see the volatility move like $100,000, which is more than the entire Bitcoin price today. But on a relative basis, it's significantly less. So, I mean, Saylor's famously said it's a feature, not a bug. But I assume this is going to be it's going to be volatile until it starts to become less and less. And really, the volatility is all a function of the underlying currency that it's um, measured against as well. So um, yeah, it's a it's a tough equation to think about, but I would expect more volatility in the future, but reducing over time as it captures a larger proportion of global addressable assets.
Speaking of volatility, I see some weights in the background, a Peloton. How do you now, but especially let's say that we go into a euphoric bull run, how do you physically, mentally, emotionally, psychologically deal with the volatility, which on a screen can be, I'm up, I'm down, I'm up, I'm down, with the potentially increasing volatility.
Yeah, I mean, this has been an incredibly emotional whirlwind, right? Like, I'm in a very life changing position, and that's been really hard to handle mentally for sure. Especially because I've already felt a lot of euphoria, and then and then I've also seen, a 50% drop in the value of my portfolio. Like looking from March, when the price of MicroStrategy went up to 2,000 and then fell all the way down to 100. I mean, yeah, that was a difficult journey. But I didn't sell a single share. In fact, I bought more because I still felt confident in my thesis, and if I was comfortable buying it at 180 or 200, I was still really comfortable buying it at 100. And I'm still really comfortable buying it at 200 because I think about the MicroStrategy market cap. And I just use that as my frame of reference. Like the market cap of MicroStrategy is about $40 billion today. And I think they're going to be $1 trillion company plus, likely at the top of the leaderboard. And I think that equation, just with having an underlying understanding of Bitcoin, that equation is really binary to me. Like they're not going to float around like the 70th or 80th largest company in the US market. Like
Mm-hmm.
they're going to go to the top and they're probably going to stay there. And maybe they bounce around one, top 10, top 20, but I think anything below that is buy territory for me. So I'm buying forever. I'm buying the local top. I'm buying Bitcoin forever, and I'm buying both of those in conjunction. Now, in terms of like managing that mentally, it's a lot of um, I think a lot, and my brain is moving a million miles an hour. It's really helpful to be exhausted, to help, make like turn my brain off at the end of the day. So,
Mm-hmm.
weights behind me, the Peloton, I go out on runs, I go on bike rides, I clear my head, go play golf. I've got this US Open, uh, poster as well. I love golf. Getting out in nature is really important. And, you know, like thinking about the joys in life too, like spending time turning off I will delete my X profile, like Twitter. I'll just delete it for days at a time. I'll come in and I'll post my daily report on MicroStrategy, but then I'll delete it and then like kind of walk away. Um, and that's a way that I kind of manage my mental approach. And also like just enjoying the things that I do have already, like my dogs, my house, and like eating good food, and that stuff is really important to me. So like, don't get over leveraged. If you're over leveraged and you feel uncomfortable, that's probably a bad idea. Mental health and physical health is as important as um, money at any point in time in the future. Like having friendships and relationships and family, and I should probably heed my own advice on that sometimes. But um, yeah, it's kind of a crazy position to be in. And I think another question that kind of comes up a lot is like um, thinking about how much like Bitcoin relativity, or like buying Bitcoin at a 3x multiple of their underlying Bitcoin holdings. I think buying MicroStrategy and buying Bitcoin are just different. They're just different positions and different strategies. And I think people think differently about them. I don't really think about how much Bitcoin they hold or the net asset value when I'm buying. I'm just looking at the market cap.
Mm-hmm.
And um, I feel I'm buying Bitcoin as well at the same time. But I also feel really comfortable with my underlying Bitcoin holdings that if MicroStrategy went to zero, I still have way more Bitcoin than anybody would have, even if it were spread, even if the price of Bitcoin were spread evenly across humanity, right? Like that's kind of how I think about it. Is like if MicroStrategy goes to zero, I still have a lot of Bitcoin. But even in thinking about the game theory of that concept, if MicroStrategy goes to zero, I mean something probably went wrong with Bitcoin. So maybe I'd be screwed in that point as well. Um, so I don't know. It's definitely an emotional ride. Being physically active is helpful, and yeah, it's like trying to jump on a bullet train. You know, it's like if you're starting your position now, like there's going to be volatility. You're going to be down. Like there was one point um, in 23 where my entire portfolio was like cut in half, and um, I was like down 50% in like my 401k, my IRA, my HSA. And like that was mentally pretty hard, but you know, I still you know, had conviction in the trade. And a lot of people think it's like it's been an easy ride. It certainly has not at all.
I keep thinking back to the latest talk that Michael Saylor did, where he walked through the three things that Bitcoin needs to cross the chasm. And two of those three have happened. One being fair accounting, another one being being recognized by the regulatory authorities. We got that with the spot cash ETFs. And the third one that we don't have because of SOB 121 is banks really cannot effectively custody and deal in digital assets.
Mm-hmm.
How do you think through, and what do you think the path is to, and maybe timing, you know, months, years, decades, to banks being able to custody and deal in digital assets? And how does that cross with MicroStrategy and the trajectory that they're on, becoming a Bitcoin bank, so to speak?
Yeah, good question. I guess I'll field it in first. I'm going to talk about the accounting, and while we technically have the accounting, nobody knows it exists.
Mm.
Like nobody knows it exists, and I think MicroStrategy, when they do adopt the fair value market accounting, and there's this potentially realized $9 billion value that they're currently sitting on, which effectively evaporates the negative earnings per share that they've had the last 4 years, that's going to be on the news, right? That's going to be a really big deal. You know, a couple of companies have adopted it already, like you know, the mining companies like Mara, but you know, they're holding significantly less Bitcoin and has a much smaller impact on their bottom line. And when this hits the MicroStrategy bottom line, it'll be pretty historic, and I think that's going to be the gun going off for most corporations to understand that this is being accounted for in a beneficial fashion moving forward, which will be interesting to see if that really starts a fire under any other companies. Now the last point that you hit on, which says the bank custody SAB 121, is really pretty fascinating too, because you know, when it went through Congress, it had bipartisan support, right? Like it passed both the House and the Senate, but was struck down via veto from the president. And so that's a really fascinating concept. I think President Biden vetoed like 11 bills in his tenure. It's kind of surprising that was one of them. So, I mean, if there is a regime change, I mean, that could be beneficial for banks custodying Bitcoin. I think ultimately it's inevitable. I think it probably happens within the next year. I think regardless of a regime change, because there is incentive for all banks to have the ability to custody Bitcoin at some point in the future as well. Like those banks have power. They have a lot of power in the equation. And I think that's we're seeing that now. I think BNY Mellon might have somehow gone around that, and they can now custody Bitcoin or something like that. And the bank that originally wanted to custody Bitcoin was like this small Montana bank or something like that. So I think the powers that be, the monetary behemoths, if you will likely start pushing for this faster and faster. And I think in order for corporate adoption to occur, I mean, Michael Saylor said this as well. Those companies and their board, like some of the larger companies, top 20, for example, they don't want to deal with Coinbase, like a 15-year-old company. They want to deal with the banks that they've been dealing with forever, that have been around for 200 years, that are systemically too big to fail. And that is a very different equation than, working with BlockFi or Binance or Coinbase or, anybody like that. So I'm excited about that future, because once that starts happening, I mean, I'll the ability to bring Bitcoin into the insurance world expands very rapidly as well. Like the conversation with those regulators starts to occur. And that's exciting to me. I mean, that's the environment I work in at the moment. I think there's just so much opportunity there, from just adding the asset to your balance sheet and the ability to use it as collateral. So it's a really important component. And I think once that occurs, it will be off to the races, and the game theory completely changes. Like the ETF was really important, but I think bank custody is massively more important for corporate adoption.
Where should people find you online to reach out to you, and any other resources that you think are super important that you utilize or that you would point people toward?
Yeah, you can find me on Twitter, Twitter punter Jeff. I was a punter in college. That's what that's from, but it's kind of a double entendre, because in British speak, it means like a gambler or taking high stakes on low probability events. So it's kind of fun. So punter Jeff on Twitter. You can find me on LinkedIn, I guess, if you want to go the old route. I'm I guess reachable there. But Twitter's probably the best, and Twitter or X. And in terms of resources, things that I look at, I really like doing my own research and, and reading things. I'm frequently looking at, option expirations, looking at open